We operate a multifamily real estate portfolio valued at $300 million, beginning with this gem in Phoenix, Arizona. We bought this 76-unit apartment complex for $6.9 million. After a short 27 months, we sold it for an $8.65 million profit. In this episode, we're going to share with you how we did it, what differentiates our quote from others, and if you can replicate this for yourself. But first, let us explain to you what mistake we made along the way that threatened to derail our real estate empire from the start and the change we made. Many people might make this mistake too, but hopefully our explanation can assist you in avoiding it. Now, we recently met Ben Hardy, the best-selling author of 10X is Easier Than 2X. Guys, in his book, he explains that aiming for 10X growth in ventures such as real estate can be simpler than merely 2Xing it. Why? A 10X mindset encourages innovative, scalable approach instead of just working harder. Many investors start small, perhaps with a single-family rental, then progressing to duplex or triplex. However, focusing on bigger multi-family properties, which for us, the Kitti Sisters, are those 65 units and above, right from the beginning, show that many processes remain consistent whether dealing with a duplex or a 200-unit complex. The twist? Larger properties yield significantly better returns, higher yields with similar or less effort. Going bigger with opportunities often requires broader vision and strategy, not necessarily more work. And that's the mistake we made when we first started in real estate investing. We also were thinking too small, right? Because we never realized that tackling large multifamily apartments would apply to people like us who's just getting started. But when we understood that the rewards of larger deals are significantly greater, our mindset changed. This shift allowed us to generate $8.65 million in profit within 27 months. If we hadn't changed our mindsets, the success wouldn't have been possible. How did it all begin? While people recognize us as investors, we fundamentally view ourselves as problem solvers. This perspective was crucial when we were contemplating the 76-unit apartment deal. These were the challenges we faced. Number one, the seller wanted to move on to bigger projects after holding the property for several years, but they needed the sale revenue without incurring capital gains tax. Number two, we didn't have the $6.9 million available, creating a financing challenge. Number three, our investors were keen on shifting from smaller scale investments to larger ones, aiming to reduce risk in the process. We solved the first challenge by including a provision in our purchase agreement. This allows a seller to use a 1031 exchange which defer tax on their gains. They could reinvest the profit in another property after selling the 76-unit apartments. So what do you do when you don't have $6.9 million cash parked in your bank account? Well, you do what we did. You raise capital via syndication. While the word may sound super fancy, it's nothing more than pulling together fund from multiple individuals who all collectively want to go into the investment together. In this case, to buy this complex. Of course, there's some paperwork and rules that we have to abide by, but those aren't complicated, and any competent SEC attorney can help you with the paperwork. The third challenge to be solved is raising capital, aka OPM, other people's money. For new investors, this is probably the most intimidating aspect of getting into larger multifamily apartments. So let's share a quick tip here. Think of it like fishing, guys. To catch a fish, you go where the fish are. When you're raising capital, go where investors are. It may seem obvious, but it's overlooked by a lot of people. The easiest way to secure funding is to connect people who are already interested in real estate and looking to invest in opportunities like this. Using this approach, we raised about $3.9 million and acquire a loan to cover the rest of the purchase price. What differentiates our approach from others? Ever assemble IKEA furniture without reading the manual first? Well, we've done that to regret it later. This is like a lot of the mistakes that people make when they get into real estate investing. They focus too much on the low prices, but miss some important details like the property quality, the location, and the income potential. If most properties are selling for a certain price and you find a much cheaper deal, be cautious. Many stories circulate about investors thinking they found that great deal, only to uncover hidden issues like incorrect financials, unauthorized occupants, and unpermitted renovations. Remember, guys, if a deal seems too good to be true, it usually is. In today's data-driven world, people know market values. Rarely will someone offer a property at a steep discount without a catch. While such deals aren't always a bad thing, ensure you know all the details. Remember, it's not just your money at stake, but also the trust of your investors, which is very important. You might be wondering, can I replicate this and get the same result? Think about ratatouille. It's a popular dish known for its rich flavors, beautiful appearance, but at its core, it's a simple stew vegetable dish, right? Saute some onions, garlics, add vegetables, seasons, and let it simmer. A straightforward process, yet a super tasty outcome. Likewise, our investment method follows a clear plan that we call the CARE strategy. C is for compass. Define investment criteria instead of impulsively chasing deals. A for awareness. Understand specific local market conditions as national data may not reflect local realities. R is for review. Evaluate the purchase price, income, expense using a simplified model for deal analysis. E for execution. Action is key, right? Visit properties, make offers for real financial growth. By adhering to this framework, we've successfully exited 3 large apartment complexes in the last 5 years, beginning with our inaugural 76-unit complex. This system moved us from small investments to making an $8.65 million profit in 27 months on just one deal. Now that you see how we made $8.65 million profit in just 27 months, it wouldn't be worth a darn thing if you had to pay a lot of taxes on it. So go watch this episode so you can learn the tax game and how to win it.